So Christine, there's been lots of noise about trade around the world, in particular US and China. How does that impact China going forward and broader emerging markets?
It's a good question, and we think this trade discussion is long overdue. And in our view, even though it creates a lot of noise and uncertainty in the short term, a resolution or some kind of coming to terms will be positive for future growth or future global growth. When we look at what's happening in China, we do not believe there will be a significant impact on China in the near term. The government has actually been stimulating the economy in little ways since June, and we believe they have a lot more room. There's certainly a lot more policy room for them to continue to stimulate if necessary. Looking outside into the rest of EM, we've been watching the open export-oriented economies very closely, like Korea, like Taiwan, ASEAN region, which does a lot of trade with China. And so far, there's been pretty minimal impact, but we're watching that very, very closely.
Now, what about India? Not much you said about India. Does that get impacted by trade as well?
It's a great question. So India is one of the economies where they're immune from trade, really. It's a very domestically oriented economy. And actually what we've noticed in recent data is their exports have actually picked up slightly in the last couple of months. And so we think they're actually benefiting to some extent from the potential uncertainty around trade. I think longer term, it's important to really highlight that really what we need is clarity. So companies are putting off spending because they're not sure what future trade terms will look like. But once we have the new terms, they'll start spending again and they'll restructure the supply chain and global growth will resume.
Thanks. Now, there aren't too many stocks in the world that have a big impact on global economies, but there is one definitely, which is Apple. Now, we've seen some slowdown in the numbers and sales forecasts. How does Apple impact China and emerging markets?
It's a very interesting question because Apple actually derives a lot of their growth from emerging markets. For example, China, not only is it a big base for actually selling iPhones into, but China's actually 30% of Apple's App Store revenue, and that's the high margin business. So if there were some kind of disruption in trade relations between US and China, Apple could be affected on that perspective. Now, looking at from the other side, Apple's also a very important customer for emerging markets, especially Taiwan. So a lot of component makers in Taiwan, like Foxconn, Taiwan Semi, Apple's by far their largest customer. So a slowdown in Apple shipments or revenues would certainly impact Taiwan specifically. Outside of Taiwan, we don't expect really much of an impact.
So as we look into 2019, what's your outlook for emerging markets more broadly?
2019 will be noisy. There are a lot of things to watch for. It's going to be noisier than 2018, even though it's hard to believe. However, we are actually optimistic on emerging markets, and we're overweight at the present time because our view is a lot of EM equities and certain pockets of EM fixed income has priced in a lot of these risks. Also, two major factors that have been really difficult for emerging markets, a stronger US dollar and a Fed that's been hiking over the last year and a half, 2 years. We believe the Fed will be more dovish in 2019, and US dollar will be somewhat more range bound, which would be positive. And last but not least, China. We think China continues to moderately slow. It's a very controlled slowing, but they certainly have room to stimulate economic activity, so that will be positive for the rest of EM as well. So we believe the risk reward is quite compelling.
Thank you very much, Christine, for your insights.
Thank you.